let's get to our first guest of the hour. And we're really pleased to welcome Marcus Bogdan. He is from Blackmore Capital, usually in Melbourne, here with us in studio. What a way to end 2020.
Absolutely, and it's very exciting to be in Sydney for the first time since February, so thank you for having me on.
Yeah, well, really great to have you here. It has been, such a year, but just to my point earlier, this vaccine optimism, do you think that there's a lot of that already being priced in?
Well, certainly you saw in November markets up over 10%, is factoring in absolutely a lot of good news already. We've sort of taken a little bit of profits at the end of the month, but we remain constructive for 2021, where we've seen the end of the earnings recession, and now we're in the expansion phase. And that expansion phase goes for a period of time. And we can see 12 to 15% earnings per share growth for calendar 2021. So very constructive around those markets. I think in Australia we're in an incredibly privileged position where we are in terms of the pandemic coming into summer, coming out of lockdown, particularly in Victoria. So all of that is good news. And in relation to the vaccine, it will be tricky. There's the manufacturer, then there's the mass distribution, the technology used, and the refrigeration of the Pfizer and the Moderna. And then we're still unclear around the level of effectiveness of the AstraZeneca one, and that's UK, Europe, and Australia. That's where we're going to get vaccinated from. Mm-hmm. So, incredibly good news about the vaccine and the timeline, but it still is maybe 3 to 6 months off before we get that mass vaccination.
Yeah, there was never going to be a rollout that didn't have some bumps in the road, such as the one that we saw from Pfizer. So I think we should, as investors, prepare ourselves to get more of those headlines out.
Marcus, I was joking earlier on the program that markets are looking as far as they can go and see, 10 years into the distance, and after a big, strong recovery over that period. Given that markets have run so hard this year, not only from the lows that we saw back in March, but into November particularly, is it looking a bit tired out there at the moment when it comes to the rally? Just looking at what's going on at the moment, there was lots of positive news coming out, but there's no real follow-through buying taking place. Yeah,
look, I think from that uplift that we saw from March 23, it's up nearly 50% the market. There has to be, and it's a healthy perspective to have some consolidation there. But then within that, you're seeing rotations happening, and you're seeing that rotation from growth to value. We're still seeing opportunities there. I mean, you've had a decade of defensive growth and high growth PER expansion. And I think as we go into that recovery in 2021, there is still some value in that part of the market in particular.
So you brought up value, and when you are looking at your portfolios and adjusting your funds and your allocations, are you doing that? Are you tilting more toward value?
Yeah, we are tilting more towards value, and companies such as Ampol, Helios, News Corp, Santos in the energy space, and Westpac. And we put Westpac into the portfolio for the first time in many years as well. So definitely tilting to value, but we still, given there's still tail risks out there, we want to have diversity in the portfolio, and we still want to have good weightings to consumer staples that I think that as an industry is in a much stronger position coming out of COVID, and healthcare is another area that we like a lot.
In that consumer staples space, so are we talking the Woolies? Are we talking, how are you looking at that?
Well, I think it's been incredible. Woolworths has really underperformed recently, and they've delivered really good growth, like-for-like sales of plus 10%. They're taking market share. And what is, I think, underappreciated from the big box retailers, whether it's Wesfarmers, Coles or Woolies or even Premier, is their successful expansion into online, and that the doubling of that business. It's very small, but it's a really important area of growth in that omni-channel.
I see Woolies trucks on the road everywhere lately. Not so many Coles, I've got to say.
Really? You mentioned the healthcare space. Now, when you talk healthcare in Australia, the name that goes to everyone's mind is CSL. It's
Sure.
dominant force. Is that something you like, or are there some smaller players out there in the space that you prefer at the moment?
I mean, CSL is definitely a core stock. I mean, their execution over a number of years has been exemplary. But there's swings and roundabouts there. I mean, the plasma collection in the US is definitely challenged. It will be below PCP. So there are real issues in supply, and that's not going to get better in the next several months until we get the vaccine. Notwithstanding that, they're getting price increases, they're drawing down on inventory, but the vaccine business, which they acquired through Novartis several years ago, has been an absolute terrific business. You know, they're one of 3 of the big flu vaccine companies in the world. They've sold out in the Northern Hemisphere. And also they'll be a toll manufacturer for the vaccine here. So that's all encouraging news. And I think around $300, that's sort of fair value for it. In terms of the other areas of healthcare, and healthcare is interesting because it has been affected by COVID, which is generally defensive, but just the nature of a pandemic. So we see good recovery coming in through Ramsay and the pickup in elective surgery. We're seeing better news out of Medibank Private in terms of growth there, increasing market share, and I think they'll have some regulatory improvements there. And then Helios, which is the pathology company, which has done particularly well in COVID, but seeing underlying volumes pick up.
Marcus, we've got to let you go soon, but I hope you don't mind me asking you in this forum. But so you're here in Sydney for face-to-face meetings. For the first time in a long time, we haven't been doing face-to-face meetings very often.
Yeah.
What's the sense that you're getting from those meetings? Are people optimistic about the year to come, feeling like there could be, a good solid recovery here in Australia?
I'm definitely seeing it in Melbourne, with just this absolute release. And seeing it in spades in Sydney. I mean, you said that the city is quieter, but for me it feels really, really busy. And as I said, we're in a really fantastic position, touch wood, in Australia, that we are going to get that recovery. We're getting monetary support, fiscal support. And so, we're encouraged about 2021.
Well, go enjoy the rest of your day, the rest
Thank
of
you.
these face-to-face. Great to have you here, and hopefully we'll see you soon.
Thank you very much for having me on.
Thanks,
Cheers.
Mark.
Thank you.